Google. It's how we find things on the internet, and it's been the primary way we've accessed information digitally for at least 2 decades. The company has become a powerhouse of information, creating indispensable tools for billions of people around the world, and it's showered money on its stockholders as one of the greatest stocks of all time. But the question is, can Google continue its past performance in the future? Will it be able to dominate in spite of the rise of ChatGPT and other artificial intelligence competitors? And will it be able to sustain its economic moat in the face of regulation? We'll answer these questions and more today on Stock Stories. Hello, my name is Alex Mason. I am your stock storyteller, and here on Stock Stories, we decode the business behind the stock in order to help you become a better investor. I'm so thrilled to talk about a company that I've admired for a long time, and we're going to talk about Google. We're going to talk about Alphabet. We're going to start with the history of the business, how it came to be. Then we're going to move on to understand the business model a little bit better, and then walk our way through the financials and my thoughts on the company. Okay, so let's go ahead and get started. Our story today begins with two graduate students in California in the 1990s. It was 1995, and a man named Larry Page and Sergey Brin met at Stanford, and they eventually started working together on this big idea. It was an idea to organize the world's information online. And this was, of course, a pretty big ambition at the time. I mean, the internet was becoming a really big deal in the 90s, and people had PCs in their homes for the first time and were beginning to access the internet. So they thought to themselves, how do we organize this information? They came up with this idea. Initially, they called it backrub because they wanted to reward websites that, so to speak, gave a back rub to another website that would link to them. And that was the original idea of just leveraging this social proof. But they eventually renamed the company to Google. And if you're wondering why Google, a Google is a mathematical term that's spelled GOOGL that stands for 10 to the 100th power. So a very, very big number. And they named it that because they wanted it to represent the size and the vastness of what Google's mission was, which was to organize the world's information. And that mission remains true to the company to this day. Now, what problem was Google solving? What were they really trying to do? Okay, they're trying to organize the world's information, but how are they going to do it? Well, in the 90s, these things called search engines started popping up, and they were basically just websites that helped point you to other websites. So you search for something, and then a list of results would show up, and then you would scroll through and pick one that you thought was going to get you the information you needed. The problem was in the mid 90s, search engines were pretty bad. There did exist many search engines. One of them was Yahoo, but it was kind of clunky and not automated. The index of the websites that Yahoo used to use was actually manually updated by people. And so you can imagine how inefficient this is, especially as the internet was growing very fast and websites were being created every day. There was not a good way to kind of track this information and make it accessible. Additionally, when someone used a search engine back in the 90s, there was no guarantee that what they clicked on was going to be of high quality. They might be led to some random bizarre site that someone created that just kind of wasted their time. And if you were alive in the 1990s, you might remember this, clicking on links and then just kind of not getting what you want and being frustrated by that. But Google solved this problem. They created a system called PageRank. And what PageRank did was they used this principle of authority and social feedback in order to point you to high quality websites. So if a website was cited or referenced by many different websites, then that would rank higher in the search engine system than another website that didn't have as many references pointing back to it. And so, because of this system, Google was able to rank websites for certain search terms based on authority. And that was the game changer that allowed Google to become a popular search engine after it was launched. In 1998, Page and Brin got their first investor, the founder of Sun Microsystems, who invested $100,000 into their company. Now, at the time, Google was getting around 10,000 queries per day, so not too bad. But fast forward 2 years to the year 2000, and Google had become the world's most popular search engine with over 1 billion index pages. So, pretty incredible growth. That same year in 2000, Google changed the advertising industry forever by launching the product called AdWords. Now, it's nice to have something that's an innovative technology that people can use, but this was really the way that Google made money, and they did it through advertising. With AdWords, advertisers could pay to have their search results put at the top instead of just relying on organically showing up by having a website with authority. They could actually pay for that. And this was incredible because it allowed people to not just advertise through the mediums known at the time, like television, radio, newspapers, but actually do it online. And this was really kind of the birth of e commerce. The beauty of AdWords is that it created an auction like mechanism that mimicked the supply and demand of the marketplace. So if there were certain keywords that were less popular, companies wouldn't have to pay as much money to have their results go to the top. But if a keyword was more popular, they would pay more money and basically bid on their right to have their results show up. So this was a way for Google to charge more money for more popular keywords, and it worked. Now, Google was an innovative company, but they weren't the only game in town. There were a lot of other search engines competing in this space. And the fiercest competitor to Google's business at the time was a company called Overture. Overture actually invented this pay per click advertising model, and they were seeing success with their business too. So the two companies were fierce competitors, but there are some key differences that allowed Google to kind of pull ahead. One of them is that Overture's business model was fundamentally different. They, instead of having their own just search engine listing all the results, they would partner with other sites like Yahoo and AOL and list businesses results on those sites because those sites were already popular and well known by the public who was using the internet. While this was good in terms of getting revenue, Overture had to share some of that revenue with these partner sites, so it wasn't quite as profitable. Additionally, Overture was different from Google because Overture focused exclusively on commercial keywords and business advertising on them. So, for example, if you wanted to find the best plumber in Houston, Texas, you could type that into Overture and maybe get a good result. And you could do the same with Google. But if you asked it a question like, what's the state bird of Texas? Well, Overture wouldn't really be able to help you out there because there aren't a lot of businesses around that search term or around those search terms. So Google had this advantage because they said, hey, we're going to open ourselves up to all knowledge and information. It's not just going to be for commercial uses. And that's kind of where Google began to pull ahead over Overture. What really launched Google into the next phase of its business, though, is actually an acquisition, not an internal innovation. Google acquired a company called Applied Semantics. And the thing about this company that's so special is instead of just looking at a website and reading the weblog and trying to understand what the page was about through very basic information, Applied Semantics had this technology that would actually understand the content of a specific website. So it would look for themes, it would look for patterns within keywords. It was a much more intelligent way of understanding and collecting information on the internet. And Google saw this and said, whoa, we need this technology. It's going to be incredibly useful for our ad business. So that's exactly what they did. They purchased Applied Semantics. They paid over $100 million in cash and stock for it. And it proved to be an incredible acquisition. In fact, it's known as one of the biggest and best, well, I guess not the biggest anymore, but the best internet acquisition of all time because it allowed Google to really explode as a search engine because it now had much more high quality and refined search results. In 2004, the company went public at $85 a share. Now, at the time, Google had about 40% market share in the search advertising business. Yahoo was a close competitor at about 27% market share. And then the company MSN had about 20% market share. So Google was the market leader at this time, but they still had some very real competition from these other players. But the interesting thing is that the revenue of this business was growing so fast. By 2004, the revenue of Google was growing at a rate of about 65% annually, which is really powerful and impressive growth. One thing that I find interesting is that Google was actually already profitable before they even decided to go public. They started becoming profitable in 2001. A lot of businesses that IPO, especially tech companies, they may have great revenue growth, but they're burning cash so quickly that they're not actually making profits, at least not for a long time. Whereas Google, it was not the case with them. They were profitable even before they went public. Now, Google's search business and their advertising business is the foundation of what Google does to make money. But in the 2000s, Google was not content to just stay in their lane and only do search. They decided to perform lots of experiments with a lot of different internet based services. So they launched a lot of other things like Google Toolbar, Google News, Google Email, and the list goes on and on and on. And because of these experiments, a lot of amazing things happened. Many of these services you and I never use in the modern day era at all because they failed. But some of them ended up becoming incredibly successful. I mean, look at Gmail, for example. It's still one of the most popular email providers ever. And that began as a small experiment at Google. So, this culture of experimentation has been baked into Google's DNA from the very beginning. Larry Page, one of the founders, has been quoted as saying, especially in technology, what's needed is revolutionary change, not incremental change. And so he understood that in order to make it in technology, not even just thrive, but in order to just make it, you have to actually innovate. Let's transition now to talking about the business as it is today. Now, in 2016, the company reorganized to being called Alphabet to represent the range of services that Google had grown to become beyond just Google itself. And so now this is a tech juggernaut that has over 400 different subsidiaries, ranging from businesses such as self driving cars to ad technology and gaming to drone delivery, you name it. Google and Alphabet, more broadly speaking, has been experimenting with so many different forms of technology and continues to do so to this day. So let's look at what are the most important aspects of this business. First of all, of course, you have Google. Google is still the main part of this business, very much so. You have the Google search business in particular, which brings in revenue through advertising, very much the same way that it did back in the day. But of course, they've made their search process better. They've made it a better search engine and overall have grown their market share to about 90%. They have a virtual monopoly on search as I record this. And we'll see if that changes, but we'll get to that in a little bit when I talk about some of the risks with this business. So Google has gone far beyond search, though. Some of the other businesses that are important right now are YouTube. If you're not listening to this episode on a podcast player, then you're probably watching me right now on YouTube. This would not be possible if Google had not acquired that business along the way of its journey and found a way to monetize it through advertising. So that's another big source of revenue. Additionally, Google Cloud. Google is also a cloud service provider, similar to how Microsoft has their business and then Amazon has AWS. Google's cloud business is not as big as those other two competitors. They have about 8% market share, but it's actually growing a little bit faster than the other two players. So I sense a triopoly forming in the cloud business between Microsoft, Amazon, and Google. And Google Cloud is actually Alphabet's fastest growing business segment right now. Alphabet also has a host of other Google services that are not monetized that much, but are starting to become monetized to an increasing degree. So these are things like Gmail, Google Maps, other types of Google products that are freely available to many, but some cases may have a subscription component. For example, Google Drive for storage. I actually pay for Google Drive in order to have extra storage space in the cloud. The two other aspects of Alphabet's business that are worth mentioning are the Alphabet's holdings segment, which is the investment arm of the company. So it's kind of like a venture capital firm for tech companies within Alphabet itself. So if Alphabet finds another business that they think would be useful for them to fold into their umbrella, they use that arm to invest in it and in many cases buy it out. They also have a segment called Other Bets. Now, the Other Bets segment are these quote unquote moonshot ideas, like shooting for the moon and taking these high risk, high reward type of experiments in order to try to find the next big product or idea. And I love this about Alphabet. It's something that spurs innovation. It actually creates new things. And the Other Bet segment, as we'll see in the financials in a moment, is actually starting to generate some real revenue. So many of these experiments obviously fail, but some of them are very successful. So, yeah, that's another segment of Alphabet. Now, I probably would stop there with a lot of other companies and a lot of other episodes, but I can't stop there with Alphabet because there's just so many interesting things to talk about with this business that really are intriguing. Another thing that I want to mention is Google's foray into the smartphone market. Now, they tried to get into smartphones many years ago and frankly did not do a great job. I mean, Apple is still definitely the top dog with the iPhone. And then, of course, you have Samsung at a close number two, and then a flurry of other manufacturers that have phones that people love and enjoy. But the thing is, Google has actually made a lot of headway with their Pixel line. Their market share in 2022 increased by over 380%, if you can believe it. Now, in absolute dollar terms, it's still incredibly small as far as market share relative to the other players. But I think that there may be something here. I think Google is starting to make some headway with its Pixel line. And if they can manage to make this a big product, then I think it could be accretive to earnings going forward. So that's something to keep an eye on. Another thing about this business that's interesting: autonomous driving. The subsidiary Waymo, they have been working with autonomous driving for years now, and I don't know if people realize this, but autonomous driving is not in the future anymore. It's actually here. There are self driving cars publicly available in San Francisco, California. So that is here, folks. And yeah, I think the potential there is incredible. People love to talk about Tesla autonomous driving and maybe one or two other companies making big waves in this space. But don't sleep on Waymo because they're actually doing it too and working with a lot of partners in order to bring this kind of technology to the market. So there are some seeds here of Google succeeding in non-traditional, non-search markets that I think are interesting to watch. Okay, let's take a look now at Alphabet's financials so we can understand where they're coming from a numbers perspective, and identify whether or not we think that this might be a good investment right now. So, first, let's look at the balance sheet. This is the balance sheet actually released just a couple days ago as of this recording with the full year results for 2022. First thing that jumps out at me on the assets side, look at this: total cash and cash equivalents, $113 billion. That's a lot of cash. Now, it is a decrease from 2021. The company has been spending up some money, but still over 100 billion in cash. And the market cap of Google right now is about $1.24 trillion or so. So, yeah, pretty nice, sizable cash hoard there. Another thing to note here on the balance sheet, if we look at the long-term debt, how much debt does this company have? It's been pretty stable. They borrowed a little bit of money a couple years ago during the pandemic, but it hasn't increased much since then. Just under $15 billion. So, not really much compared to the amount of cash they have on hand, compared to their assets, compared to their cash flow. And so, overall, yeah, this is a really strong balance sheet. They Yeah, just really strong. I love it. Now let's continue on and look at the income statement. So I want to point out something really powerful here. Look at the earnings power of this business. The revenue in 2020, $182 billion. $182 billion. Even not looking at any other data points, it's like, wow, this business brought in 182 billion. Fast forward to 2021, 257 billion. Fast forward to 2022, $282 billion. This is a company that even 20 years later, after refining its search engine, it's still finding ways to make massive amounts of money. Usually, when companies grow to this size, they're not able to grow at a double digit growth rate. But between 2020 and 2021, Google grew its revenue by 40%. Incredible. And then from 2021 to 2022, it was more modest. I mean, it's kind of hard to match those growth numbers from the year prior. So they grew at about 9%, just under 10% in terms of revenue growth. So very robust. I will say the cost of revenues has increased by a decent amount. That's what is cost of revenues. That's like the general things that they need to scale their business. So as the revenue increases, there are certain costs within the business that have to increase as a result of that. So that's captured in that line item. I also want to point out that the research and development costs have increased from 31.5 billion to over 39 billion. So the company's spending a good amount more on R&D. I know the headlines have been showing that, yes, there are people getting laid off at big tech companies, and Alphabet is definitely no exception to that. They are letting go lots of workers. But in terms of spending on high priority projects, they're actually spending more money. So that should tell you something about their financial position and their strength. And then let's go ahead and look net income. We see that the profits did fall this past year. And again, that's due to the increased spending and the fact that revenue, it grew, but it just didn't grow nearly as much as it did in the year prior. Okay, looking at the cash flow statement, there's some interesting things here I want to point out. So, first of all, the cash flow statement, as a reminder, this shows us the actual money going in and out of the business that's flowing actually between different parties. So, the cash from operating activities, this is the actual cash that Google received. So, $91 billion is actually almost exactly the same as it was in 2021. So that's something to keep in note here. I do want to point out that this company is unique in that it pays a lot of money to stock compensation expense. That means they're paying their employees a lot of money in stock. They paid their employees over $19 billion in shares in 2022. So that's a pretty big expense, but you know what? Google can handle it. They've got over $91 billion in operating cash. So they can do something like that. And they have been doing that for many years. It's not a surprise. And then as far as investing activities, the company hasn't been buying and selling securities nearly as much, but they have been putting more money into property, plant, and equipment, over $31 billion. So massive spending here. But, in light of the lower revenue growth, you might ask yourself, well, why are they spending so much more money if they're not making as much revenue? Well, they need to prepare for the future. And I think that's really what Alphabet's management is focused on right now, making investments for the future. They had some incredible banner years in 2020 and 2021, and I think they want to keep that going for the future. All right, financing activities. This is something to point out. Repurchases of stock. Look at this. They bought back almost $60 billion of stock in 2022. So if we balance that out with what was it, the 20 billion? Yeah, just under 20 billion in stock compensation expense. That means their net share buybacks are about $40 billion, which is pretty substantial. If we take that 40 billion and we compare that to the market cap of 1.2 trillion, that's about a 3%, a little over 3% yield on the buyback. So that means that if the company did pay a dividend, which they don't, that would basically be equivalent to about a 3% dividend from the stock at current prices. So, just so you know, that's how Alphabet is currently returning its cash to its shareholders. So, those are some things I want to point out. One more thing on the financial statements that I think is pretty interesting. I want to show you the breakdown of the revenues. If we scroll down to page 60 of the latest 10K, here we have it. So we see that the Google advertising network, $224 billion out of the overall $282 billion. So this is very much still an advertising driven business. That hasn't changed. But the services and the diversification of that advertising revenue has changed a lot. Back in 2012, I looked at an old 10K from 10 years ago. It was basically all Google search. Google search, and that was 92% of the revenue back in 2012. Now it is much different. It's only about 57% of the revenue, whereas other aspects come from things like YouTube, the Google network, other Google services. And then in addition to advertising, you now have things like Google Cloud. This is the growth that I was talking about earlier. Google Cloud, 13 billion in revenue in 2020, 2022, 26 billion in revenue. Boom. They doubled in 2 years. So this is a very fast growing segment of the company. You definitely got to watch this because this is going to be a key piece of Alphabet's business going forward. And then let's look at this other bet segment. It's not that much in the grand scheme of things right now, but this is going to become a bigger part of the business also. 2020, the other bet segment had only $657 million in revenue, almost nothing compared to the core business. But look at 2022, over $1 billion in revenue now. It's crossed that $1 billion threshold. I wouldn't be surprised if 10 years from now, the other bet segment was bringing in something like $10 billion in revenue, which would be fantastic. So, this is a business that is becoming more diversified over time. They're growing still at a steady rate, and they're returning cash to shareholders in the form of share buybacks. Okay, with all that said about the finances, I need to address some of the risks with Google. Okay, with Alphabet, as in any technology company, you're going to have risks related to technology. If Alphabet does not continue to innovate the way that they have historically, they are in big trouble. Now, for example, you may have heard or seen in the headlines recently this new chatbot service called ChatGPT has come on the scene. And I have personally used ChatGPT and experimented with it. It's a pretty interesting piece of technology. You can get some interesting answers from it. People are worried that this is going to take away from Google's search revenue. It's going to kill their business. I don't really see that happening. A chatbot is interesting, but it is not a search engine. A chatbot can be integrated and complementary to a search engine, but they're kind of two different things, at least the way that I see it, fundamentally as a user of technology. But it's still a risk, right? Companies are out there developing artificial intelligence, creating new products every day related to artificial intelligence. And Alphabet has been working on this too. They've been working on AI for some time, and I expect that to continue. But the thing is, Alphabet has to be careful about how they implement AI and how they invest in it in the future to make sure that it not only makes money but does so in an ethical and safe way. And so I think that's kind of a whole kind of thorny bag of questions that have to be wrestled with. But I do think if any company is capable of tackling the issue of AI in the world today, Alphabet is one of those companies that can do it well. So that's something to consider. Another consideration is a regulatory risk associated with this business. I mean, this business has been fined by the European Union like time and time again for so many different things. And I don't expect that to stop. I think that when you're this big and you have the scale that Alphabet has, you're constantly going to be looked at. You're constantly going to be scrutinized by regulators trying to figure out if you're too much of a monopoly here or you're doing too many things over there. And there's going to have to deal with that. The fortunate thing is, from a financial perspective, we looked at the balance sheet earlier. This is a company with over 100 billion in cash. They can figure this stuff out, and they have been figuring this stuff out for years. So that is not a deal breaker for me. So those risks aside, I think that this business is amazing. I think it's amazing. I hinted many episodes ago that there was a business that I was buying, that I was excited about, the stock that I was really into. Guess what? It's Google. It's Alphabet, ladies and gentlemen. I've been buying shares of this company for about a year, and I've recently stopped purchasing shares. But I it's the only single security that I bought in 2022, pretty much, except for Etsy. I mentioned Etsy already, but I bought that a little bit in the early part of 2022. But pretty much from what, maybe March, April on, all I was buying was Google. That was it. So, Alex, why did you buy shares of Alphabet and not shares of other competitive businesses like Microsoft or Amazon? Well, it's because of this concept that I will be talking about in a future episode that I've already recorded. And it's about this trifecta of quality, growth, and value. Now, Microsoft, Amazon, and Alphabet are all, I think, high quality businesses. I don't think many people would debate me on that. But as far as the other two aspects, I have some reservations. primarily on value. So Microsoft is still a business that's growing at a double digit rate. Incredible business. If I could get the shares at 15 times earnings, I would be very happy. But it's not trading at 15 times earnings. It's trading at over 30 times earnings or somewhere around there. Amazon, the valuation is, I feel like, just always high. It's always a hyped up stock because it's just been so incredible for so long. But I also think that Google, Alphabet, its valuation is just way more compelling. And you still get good growth and you still get good value and you still get good quality. So because that business has those three things in my eyes, that's why I purchased the shares. That's why I felt enough conviction to buy it as opposed to these other amazing tech businesses. So that's the reason, just in case you were wondering. So that's what I've got for you today. Thank you so much for checking out this episode of Stock Stories. Now, as a reminder, I've studied over 142 companies at this point. This is the 143rd, no, the 144th business, actually, because I have another episode I've already recorded that I haven't released yet. So check those episodes out if you're interested in other businesses. And remember, we're studying the entire S&P 500 one by one. Join me as I go on this journey. Thank you so much. And I'm curious to hear what you think about this idea of purchasing Google shares. And in fact, I did purchase many Google shares. So if you have some opinions, let me know in the comments section, or you can email me at alex@stockstoriespodcast.com. Thank you so much, and I'll see you next time. Bye.